everyone who is joining us for part two in our financial capability series. My name is LaQuanda Witherspoon with Business Enterprise Development, and we are super excited to have Josh here again. If you were here last week, then you know he is very engaging. Um, so feel free to turn your cameras on. Feel free to come off of mute when you have a question. And I'm just going to pass it over to Josh to get started, and I'll stop sharing my screen so you can share yours, and we can just
Okay,
go ahead and get started.
very good. All right, all right. Thank you, Laquanda. And just like Laquanda said, you'll come off mute. I'm not going to monitor the chat, but I'll see a report of the chat later on. So go ahead and come off mute if you do have questions. I will break for questions. I want to applaud you guys because this is dry stuff. And what's great is that you recognize that the break-even analysis is going to be such a valuable tool for you. And I'm going to validate those feelings that the break-even analysis is going to be your new best friend to figure out how you're doing and to either support or to make you change your pricing. We're going to get to pricing next week. It's gonna help you figure out if you're succeeding or not. It's going to tell you why you are either really happy or struggling. So, like I said, feel free to ask questions. Let me move this. Okay. Feel free to ask questions. There are no bad questions. And I will share resources with Laquanda and the Office of Procurement afterwards. And please remain on mute until you are asking questions so that the noise isn't distracting. I would love for you to have your cameras on, but it seems like you're not going to, and I'm okay with that too. And if I could have you guys commit to staying engaged and learning 3 new things today, I'm quite positive you will indeed. So we'll look for that. Okay, are you ready? Without further ado, put into the chat your name, business, what do you hope to learn today? Okay, let me see. I will open up my chat, see if you're let's see here. Oh, I guess I can't see the chat. Laquanda, what are people saying? What do they hope to learn today?
We got some bubbles going, so we haven't gotten anything typed in yet, but I am
Okay.
looking at the chat and I see the bubbles letting me know that people are typing.
Okay. That's
So
good.
I will definitely assist you with
Okay,
monitoring
so
the
we're going to
chat
return
today.
to that. While I review today's agenda, we're going to do a little welcome, talk about me a little bit. Then we're going to do a financial statements review, what we did 2 weeks ago. Then we're going to talk about margins and then the break-even analysis. And the break-even analysis is going to bend your mind. Okay, so what did people learn? Or what do they want to learn?
It is still bubbles, so I'm waiting for
Oh,
them to finish.
okay. I guess
All right,
we'll
let's
leave that be.
see. Someone said they're looking forward to reviewing the financial statements. There's also a hand raised currently.
Yeah,
Lulu.
yeah, I'm not able to type in the chat.
Oh,
I
what is up with this chat?
Lulu, what did you want to learn, you think?
I want to learn how to be more profitable. So, there's a lot of like hidden costs that go into shipping product, exporting, shipping costs themselves. So, making sure I'm pricing my product appropriately.
Very good. Okay, we'll definitely get there. We'll definitely get a sense for that to test if you are profitable enough. That's perfect. Okay, good one. We'll breeze through this. This is our mission is to support and accelerate business development and growth by targeting women in all businesses to strengthen their participation and impact in the economy. And then I'm part of this access to capital programs and services team. I'm the managing director, so I'm on the admin side. Then we also have Kelly Gumbiner, who's our director on the program side, and we have 2 associate directors. Emma Westfall is our point person in charge of the direct lending program, which we'll get to a little bit later. And Dania Beal is our point person in charge of Kiva, which we will also get back to a little bit at the very end. And then you can connect with us and grow with us. We've got a newsletter, we've got a Facebook group, so definitely look us up and do a search for the Access to Capital community from the WBDC Access to Capital community. We also have a monthly Money Moment video series. These are 1-minute popcorn series. So then if you go to Instagram or YouTube, you could do a hashtag WBDC Money Moment, and you could see our videos. And we're going to get back into doing live webinars called Let's Chat Live. We're going to have a few cohorts called the Data to Revenue cohort. It's now an 8-week financial and technical seminar. I'll have to change that. And then we have lots of webinars. So I hope that you'll get involved. And I hope to send you some information about what we have going on. So let's do a little financial statement review. You're going to find I'm going quickly because we've got so much to cover.
And just before you go ahead, I'll just mention we had 2 more comments in the chat that people wanted to learn about break-even analysis to see if there's to compare their current template. And then there was also some interest in knowing if there was software available to make analysis faster when it comes to break-even.
Okay. Janetta, what was your question? Oh, she didn't have one. Just raised her hand. Okay, thank you. Thank you, Laquanda. So remember that we talked about the 3 primary financial statements: the balance sheet, income statement, cash flow statement. Remember, we said it was sort of like how people at a party will ask you about. The balance sheet is they'll ask you, do you tell me about where you live? Tell me about your house. Tell me about where you rent. They're getting a picture about you. The income statement is talking about, well, how much do you make? They're getting a picture for your job. How much do you make? But the cash flow statement is when they say to you, really, how much are you bringing home? How much of you might be making that amount of money, but after taxes, what are you really making? That's the cash flow statement. The cash flow income statement is what you tell your investors, your bankers. They want to see how your business is doing, but sometimes that's often what's called accrual basis. That is the basis where it's not cash basis. It's not the cash in. It's accrual. It's whenever you bill, that's income. So you're within there. There's going to be some accounts receivable. It's called. You're waiting for some of that money to be received. That's why your income statement might seem a little bit bloated. But that's where you tell people I'm $1 million company, even though for real, I only had cash of 500,000. And then the cash flow statement is that cash. It's exactly how much cash is flowing through your business, both coming in and going out. This is the income statement we talked about. And remember, we have the sales, we have the cost of goods sold or the cost of sales, and then the net margin. And that's your net income, and the margin number tells you how profitable your business is. Okay, that's what a lot of people ask about, your net income. Now, like I said, that's what the investor world wants to say. What is that's what a lender wants to say. What is your income and what's your net income? But what you want to say internally is, sure, I had net income of 400,000, but it was a little bit harder than that. I didn't see that cash. And the overhead is right here in the operating expenses. We are going to be talking about soon that these costs of sales and the costs of good are what's called variable expenses. They vary based on how much you are selling. So that's called variable expenses. And these are fixed expenses. They're fixed in time. They're fixed because there's nothing you could do. No matter how much you sell or no matter how much you don't sell, you're still going to have rent. you're still going to have to pay for supplies. Those are called fixed expenses. We're going to get there. And then the profit margin, as we discussed, will pay for your expenses. Okay, so are there any questions on that? Remember, we talked about the profit margin, and the profit margin, this is called the profit margin of the revenue minus the sale minus the cost is your profit margin. Your profit margin is what's paying for all of the fixed expenses. We're going to get into today what's called a product margin, because it's basically the same thing. You have a profit margin for all your profits. What's the margin? A product margin is when we're going to talk about variable cost per product, and we're going to get there soon enough. And we're going to dive into it right now. It's good. This is a very complicated thing. So we're going to have a case study, okay? So work with me here. I'm going to try to use your imagination that this here is the Soft Noise Machine Company, a noise machine manufacturer founded by this very own noise-loving yet sound intolerant sound engineer. She builds white noise machines. Their patented Quiet Riot noise machine sells for $49.99. You see it right there. And last year they sold 50,311 machines. You see that there. Okay. So we're going to go through this case study to give you a picture of how it operates. And then what you're going to do is apply what we teach today to your own numbers. Because we only have an hour, we're not going to have an opportunity to put your numbers into it. But I assure you, we're going to repeat and repeat so that you'll get an idea, and you'll go right back to your own taxes, for example, and work out your own break-even analysis. So this is the soft noise machine income statement. Oops. And so you see here, it's got the revenue, like we said before. It's got the cost of goods sold. Cost of goods sold for them is machine inventory and shipping. And then it's got all these expenses, okay? And now let's talk a little bit about product margin. And now you'll see why in a moment that we have to establish what the product margin is. And this is going to be very important for figuring out your break-even analysis. The product margin is money that you have after variable costs are paid, and they fuel business growth. When we talked before about how to increase profit, it's really how do you sell more product with margin, because the margin is where you're going to get your business growth. Margin is what's going to pay for your fixed costs, and it's going to drive your business growth. So let me just give you a quick word about variable costs. And now I talked a little bit about this. Now, variable costs are those costs that rise and fall tied directly to your product or service sold, meaning the machine inventory number of $1,006,009 that would go up or down because of how big their sales revenue is. When they sold more, they needed more inventory, so that number went up. When they sold less, they needed less inventory, so that number went down. That's why it varies. That's why it's called variable. In shipping cost, it is for every soft noise machine that's sold. So it is variable. It's up and down no matter depending on how many is sold. Okay, so that's variable costs. And here's the margin again. An idea of you got your variable costs underneath. Here's your price. Whatever the difference is, that's your margin. Okay. That's your product margin. So here's your price. Here's your variable costs, and the coins again are margin. Are we ready to go into break-even analysis? LaQuanda, are there any questions?
There aren't any
about.
questions in the chat, but Janetta has her hand raised. So I wanted to ask if you had a question.
Yeah, I was I didn't know how to unmute it when I first raised it, but I was driving. I was trying to see if he could put the information in the chat regarding the webinars and the Facebook pages and all the links to stay in tune.
Oh, very good. I really appreciate that, Janetta. Absolutely, I will. I'll make a point of adding that in. I'm going solo today. My partner wasn't able to be on the line. She's normally really good at that. I'll thank you for saying so. I'll make sure to do that. Or if I don't have time, I'll send it with my other
Yeah,
information. I'm
we
sorry.
can send a
No
follow-up
problem. Thank
message at
you.
the end.
Yeah.
So if you don't have a chance, then Josh, if you share with me, I will send it out
Okay, that's excellent.
and
Thank you
follow
so
up.
much. Yeah,
Mhm.
we'll play it that way then. Thank you. Good question. Are there any other questions about product margin? So you could really see that your product margin is, everything else in your price is working to pay for the cost of that service. So you're not going to be carrying on any more of that price away because it's already committed. Whatever price you're able to carry away to pay for your fixed costs, your rent, your supplies, your utilities, that's going to come out of what's called the margin. Okay. Because your point. So what is the point of a point? Your breaking point analysis. Okay. It is telling you how much of your product or service you need to sell so that you break even. Break even means that it covers your nut. It covers all of your fixed cost. After that, it's profit. Okay, that's what you consider profit. That is what you consider gravy. So you have to. So let's say your units are these acorns. You know, some of your acorn, a lot of that margin is going to go in there to pay some of the fixed costs. Another, some more of the acorns going in to pay the fixed costs, and so they disappear into paying the fixed costs. But eventually it fills up. It fills up, and then you get above that line. Above that line, you're going to break even. Above that line, you're going to be in the money. So what the break-even analysis point tells you is it tells you exactly how many units you have to sell in order to have all your costs covered. Okay. And then that is your goal. Okay. And yet is your goal. And once you get more than that, then you're in the money. Then you got some profit. So let's talk about units. This is really troublesome for a lot of businesses, and we could spend a whole class on this, but we're not. We're going to spend one slide. The unit, all businesses can be broken down into a unit of measurement. So you think about how your product, so products is a really easy unit of measurement. If you're selling ice cream, it's very easy. It's the gallons of ice cream, it's the pints of ice cream. Those are your units. And everybody knows that, and it's really easy. But if you have a sale, if you have a service, that's where it gets a little complicated. Is your service by hour? Are you like an accountant or a law firm that sells, that you take retainers and you sell per hour? So this is your unit is hours. Are you a consultant that has a project or sessions that you're selling for classes, or you're selling for a whole package? You know, then this is your unit. I talked to a psychiatrist who had Medicaid invoices. That was their unit, to think how many invoices did they have to sell. And it might be class of products. We had somebody who had uh, beauty products. And so they couldn't do a break-even analysis that you would think that's a product, beauty products, but they had 5,000 units. So different units, I mean. So they had to break it into classes of products. And So the ultimate question that you have your break-even analysis, and the question that came up for that company was, what was she trying to answer? Okay. What she couldn't answer, she could eventually, if she had a point of sale system, that point of sale system might automatically do a break-even analysis for each of her product numbers. But here we have, she didn't have that. So what are we going to do? And is answer a different question. For her question was, small thing, like are her this group of lipstick that was grouped the same, was that profitable? This group of lipstick that was a little bit more expensive, was the shampoo that's conventional shampoo that was more expensive, and was able to break it up like that. Are there any questions about units? Complicated. Very good. Nothing. Come off mute if you have a question. Okay. So let's talk about the fixed costs. And we said that cost that regardless of how much product you or service you sold. So that's why you have advertising. You pay that monthly. Interest, you pay that monthly. And interest expense, you pay insurance, payroll taxes, rent, research and development. These things, salary and wages, these things are 100%. Now, if you have somebody who you're paying strictly on commission, that commission could be a variable expense. But if you have them on salary, then absolutely that's going to be that. So here's the bottom line, and this is the easy peasy thing, and you're going to say, boy, that's easy. This is it. This is the break-even analysis. This is all it is. The break-even point is equal to the fixed cost divided by margin. Just like I said, how many units with their margins, that's the price minus variable expense, that's the margin. How many of the margin of these units will be able to pay for the fixed costs? Just like the nuts in a bowl. So let's see this in practice. Wait, are there any other questions on the break-even analysis? We're going to see this in practice, and you'll get so used to it. Fixed cost divided by margin. You're going to hear that in your nightmares. Fixed cost divided by margin. And hopefully they won't be nightmares. You're going to hear that in your dreams. Fixed cost divided by margin. So we're back to oh, yes, Lulu.
Yeah, so why are we not looking at variable costs if, we still need to pay for those to actually have the net profit?
Yeah. Oh, so those were two different things, and it is a little confusing. Net profit is a term that you see on the income statement. So profit is different than cash. Profit is also different than margin of a single product. You can't call, if you sell, if she sells this noise machine for $49.99 and it only costs her $20, you can't call the $29.99 profit, right? Because that's it's too early to call it profit, right? It's gonna be, yeah, you gotta see many of those to see how many of those can first cover your fixed costs, and then you're gonna see how many of those will give you some profit.
Thank you.
Yeah, definitely. I really appreciate the question because that you made it crystal clear. I really appreciate that. So how many machines does how much does she have to sell to break even? Okay. And then like Lulu said, it's how much will she have to sell to get to a profit? That's really literally what we're doing here. So we're going to break apart this formula, fixed cost divided by price minus variable costs. So we've got so first we're going to get the fixed costs. when we take out these paper, depreciation is one that we take it out. And we take it out because it's just on paper. It's not a real expense. It's not something that you pay with cash. So we get to this final number, 1,242,807. Okay, so that's your fixed cost. Then we got to figure out your variable cost per unit. The top line is the total fixed cost. The bottom line is per unit. Okay, that gets a little complicated because your price is per unit. You know it's $49.99 per unit. The variable cost also has to be per unit. So then you have the total variable costs, this number at the bottom there, the cost of goods sold, divided by the number of units, you get $24 per unit. And then step 3, you put it all together. So you do the fixed cost divided by the price minus the variable cost per unit. You know the margin is $25.99. And then you could divide that and you get this break-even cost. You know that it takes, and then I like to get all the way down to weeks. You have to sell on average 996 soft noise machine products per week to keep your head above water, okay? That's your bottom line number. It is not telling you how rich you're going to get. To the question of how much profit you're going to get, what it's going to tell you is what's your bottom line number before you start to get into profit. What is the bench on which you could stand to make lots of money? Perfect, Lulu. Love seeing that heart. But wait a minute. What if there are multiple products or services? This is where we're going to spend the rest of our time. And then, and definitely wait for, if there are any questions, go ahead and interrupt. This is what happens when the noise-loving yet sound-intolerant sound engineer came out with 3 different noise machines, the quiet, quieter, and quietest noise machines. The price per is in the next column, all the way up to $94.50. And then we know the number of riots sold and the percentage of total sales. Now that's important to figure out, the percentage of total sales. And we're going to try to figure out how are we ever going to figure out how much do we need to break even? I'm going to give you the formulas right now. The first rule to keep in mind, and this is really important, is that each person takes the burden of its sale percentage. This might be an aha moment for you. That you're not trying, every one of those products is not trying to do the entire bowl of fixed costs. We had before 1 acorn for the whole bowl. But in fact, we now have 3 different acorns, essentially, 3 different units. And so we know the percentage. We know the original one is 54%. We know the middle one is 19%. And the most expensive one, they sell 27% of the units sold are the most expensive one. Now, again, why is that so important? To emphasize, that's the very first rule, is that each of those are only going to, their margins of each of those products is only going to take 24%, 27% for that guy of the fixed costs. There was a question. You could go ahead and come off mute.
Hi. I was just wondering how you're allocating the percentages.
Oh, yeah. So then, very good question, Kalechi. It's the percentages were 100% of what is 27 divided by the total? 27,000 divided by the total, it's 54%. 7,400 divided by the total, 19%. Oh, I messed up the percentages here. Isn't that funny? Very good, Kalechi. All right, we'll figure that out. for the purposes of this show, we're gonna assume that those numbers are correct. This is the total. Oh, okay. No, they are correct. My bad. It's not the total number of the units actually sold, it's the total number of the revenue sold. So for example, if you do 27,000 times 49.99, that would come up with the total revenues, and that total revenues divided by the total revenues of the business was 54%. By the same token, 7,400 times 6,450 comes up with a revenue generated by quieter noise machines, then quieter riots, then that's divided by the total sales, and you get 19% of the total sales. Can you give me a thumbs up if that makes sense? Oh, good. Very good. Yeah, sorry, I got confused. I confused myself there for a second. So that was a good, thank you for clarifying that. So this is basically based on the revenue sales. And I'll make a point of changing that before I send it out to you, Laquanda, the revenue percentage of each of the sales. So this gives you a better idea of where it came up with the percentages. And this is how it came out. Those numbers translated to this number up here. $1.3 million were generated by Quiet Riot. 477,000 were generated by Quieter. 679,000 were generated by the Quietest Riot, for a total of 2,515,023. So what you end up doing is we're going to figure out what is the fixed cost. Step one is to figure out the fixed cost. That's the top of the line. We're doing the same fixed cost again. So we're going to multiply it by 54% to figure out the fixed cost burden of the Quiet Riot. The fixed cost burden of the Quieter Riot is 19%. It's going to mirror the revenue that they brought in. Next, we figure out the variable cost per unit. The machine inventory, we saw that it tracked exactly by the percentages again. So that's the cost of goods sold per inventory. Actually, these don't track like that. That's the actual number. And the Quieter Riot, as we'll see later, costs a lot more for some reason. And then the Quietest Riot is over here. And then we found out that the shipping cost, so that is the actual machine inventory cost. The shipping cost is $4.82, which is this number divided by each one of them. They all cost the same to ship. So that is the total number of units divided by the shipping cost. So that way we can say, here's the number this is a better one for Kalechi. This is a better one. This shows you how much revenues each did based on the number of units sold. And this is the inventory per unit. Here we have machine inventory per unit plus the shipping cost, and we come up with a variable cost per unit number. So now we know, that's the way you always look. Sometimes you're going to have data of your inventory or your variable cost that is monthly, but you have to get it down to a unit cost. So you would divide it up by the months and bringing it down. Here we had one that we knew was we had actual machine inventory costs, and then we knew that shipping costs were the same for everybody. That's why we were able to add one to the other. So we have the total variable cost per unit. And it's going to be different for each one of them, as you see. Next, you put it all together. You have the fixed cost per unit, Then you have the price per unit sold. Then you have the variable cost per riot sold. And then you have the break even for a year. Meaning the quiet riot you have to sell 20,000 of them over the year to break even. Because again, the quiet riot is not trying to its margin is not trying to cover all of the fixed product. It's going to cover that percentage of its sales. But look at that. The quieter riot is selling. It only realized now that it is selling at a price less than its variable cost. So there is no break-even analysis. It's already in the black. In the red rather. It's never ever going to be. It's like that old joke about the currency bank, the bank that sold coins, and the question was, how did they profit? And the guy said, volume. They just sold coins for the cost of the coins. So is this acceptable? This is what we're looking at. The quiet riot selling 429 per week. The quietest riot selling 114 per week. Can we do that? That's the question that you would ask. Can we do that? Does that make sense? Now, in the quieter riot, you bring in the people working on the quieter riot and say, what is going on here? Why did your variable costs outstrip your costs? Now, there are two ways to approach this. There are two ways to approach this. The first way to approach this, and I was thinking I would put in a slide but I didn't, a slide of a teeter-totter, because they do affect one another like a teeter-totter, right? When one kid is down and the other kid is up, that is when the variable costs are down, your margin could go up. And when the units that you need to sell go up. Can you imagine if you are selling these quiet riots with only 5 cents in margin, you're going to need to sell a whole lot of units. So that's going to be a high number of unit sales to break even. If you have just a few, if you're selling with $1,000 margin on your riots, then you could see that it's going to be a low number that you have to sell to break even. It's like people who sell cars. The people who sell cars only have to sell maybe one a week. If they have a good month, if they sold 4 cars a month, because they have such a big margin. And so that covers the break even. But the quieter riot, what happened with the quieter riot, what they discovered is that they took their eye off the ball, and the main part of the quieter riot, that the main guts, the software, it became licensed, and all of a sudden it cost a ton of money for that quieter technology in the quieter riot, and all of a sudden it was more expensive, and it got away from them, and they didn't pay attention. And look what happens. They were losing money shipping this thing out and still selling it at the ancient price of $64.95. So they could either, as we know, there are two ways to handle that margin. You could either raise the price, keep the variable costs, keep those blocks where they were, and raise the price. All of a sudden you have more coins, right? But or you could remove some of the blocks and have more coins. And then so the quieter riot has two choices. They could figure out a way to vastly reduce their variable cost, or they could raise the cost of the price of that unit. So the question is, with a market handle of bigger cost. We're going to talk about next week. What is that? In 2 weeks, we're going to talk about what does that mean? Raising pricing, and how do we go about that? But that is a question. Are there any questions about that? That was big stuff.
Thank you, Josh. I do have a question. This is Lulu. So
Yeah, I love it.
if I have a class of products and there is different pricing per customer, am I thinking about this correctly, that I would do this break-even analysis per customer?
Yeah, what I would do, that's a really great question. And that's interesting that you have it based on your customer. What I would recommend doing is grouping your customers somehow and asking, and it depends on how you're asking your question. If you ask the question, are your most expensive customers worth it? Are your least expensive customers worth it? You know what I mean?
Yeah.
Then that's a good way to do it. If your question is, are your is the different pricing worth it? Then you might finely tune grouping them, just because it's hard to do break even unless you do only have three or four customers. If you have 3 or 4 customers, then that is a good way to do it, to do a break even analysis for those 3.
Thank you.
Absolutely. There was another question. Oh, I thought I saw a hand raised.
I see a hand raised. Leona, if I'm saying it correctly, would you want to come off of mute? Mm,
Yeah, I guess not. These were heady
I'll mention that the
concepts.
audio's acting. If you want to type it in the chat, we can answer it for you if you want to type it in the chat. And while we wait for the question in the chat, if anyone else has any questions and wants to come off of mute, feel free to. Oh, so let's see. So could I use this margin with different colors and sizes for my product?
Absolutely, you could do that if that makes it easier for you. You could use different colors in your own records. What the different colors is helpful when the products are exactly the same, except for one change or another. But it might be easier for you when you're looking at your own internal financials. You wouldn't do colors. You would call them something different when you're submitting it to your bank or to a lender or to a finance person. But this break even, it does let you know the age-old question: how many do I have to sell before? How many do I have to sell before I have to put more money in to pay for this dream of mine? That's what it tells you. And it's a good way to test. And as we saw here, it really it's a really great idea, because it really opened up for us that Quieter Riot took their eye off the ball. So it really is a good effort to be able to figure out which one is not working. And as LaQuanda knows, I like to give quick plugs for myself. We do have Yeah, this is the cost, Laquanda, when you asked me to present.
There is no issue. Yes, please, please plug, plug, plug.
Oh, you're so great. Thank you. Thank you. Um, yeah, and I want everybody to know I did not pay her anything under the table. So the Kiva loan, this is, and just so you guys know, we are a hub for Kiva. Kiva is another nonprofit, so we are a hub for them. For a loan that's up to $15,000, 0% interest, term of up to 3 years. And it's, again, let me say it's 0% interest. The trick is that it is a crowd-based loan. You raise the money that you get approved from the crowd, okay? So it is from 2 billion, they borrowed $2 billion from over 2 million investors through the Kiva website. And this is from entrepreneurs around the world. It's a good crowd. The way it works is you talk to them, and then they approve you. And the first stage is they ask you, like in India, there were microloan communities where they each supported each other. Here, the situation is they ask you to get friends and family of yourself up to a certain number, like 10 or 12, to invest into Kiva, put in $25, and then there'll be a $25 loan to you. And then you have another 30 days. You have 15 days to do that, then 30 days to borrow from the 2.7 million investors. Every quarter, Kiva will send out checks to everybody, including a few pennies to your $25 investing relatives and friends. Then we also have our direct lending program, which is loans up to $50,000, 50, if you are if you have 2 years of operations in business. Okay, and that's the thing. We don't care about credit. We do care about collateral. So we are there to support you and to help you get to a point. We ask for a lot of documents, but we help you get those documents together. So you get to us first, and then you refinance later when we get you to a bank. And then finally, I am one of 11 businesses in the Small Business Source. This is the Cook County Small Business Source. You are on a program sponsored by the Office of Procurement, and I'm bringing in the Business Enterprise, BEP's Small Business Source, which is another group within Cook County. And I hope I did that properly. And then BEP, what is that, Laquanda? It's Business Enterprise Program?
No, we're development. Yes, development. I know it's so many BEDs now.
Yeah, but they're the BEP. They're under BEP in Cook County. Well, you're development.
I'm not gonna tell a fib. I do not remember what the P is, but we are all under Cook County, the Cook
Apparently, you
County
don't need
umbrella.
to. That's awesome. Apparently, you don't need to know that to keep your job. But I say you don't have to. So anyway, I love it. And so if you wanted to get advising through me or through anybody from my team, go ahead and that's free advising through the source. Do that QR code and ask for the Women's Business Development Center. You would just go through their little intake form and ask for the Women's Business Development Center, and then you would get through to us and get one of our great people.
They're the Bureau of Economic Development, and we're enterprise development. That's what it is.
Oh, I see. Very good. Thank you. Bureau of Economic Development. That BED. Very good. Thank you. Well done. And that's it for me. Are there any last questions?
And I'll also say I did drop a survey in the chat. As we do these type of sessions, we want to continue to bring these type of things to you for free, ensure that, the things that we're offering make sense for what you need as far as our vendor community. So if you have a moment, please take a chance to fill out the survey to give us some feedback, so that we can ensure, like I said, that we're meeting your needs.
Yeah, that's great. I'll put one if you wanted to talk to me. I'll put one in.
I will
Can
also
I?
drop the source's website in the chat. And I'm sorry, someone was saying something. You go ahead.
I apologize. Hi, this is Melissa. Just a quick question. After going through the slides and the recording, and if I have a question, is the facilitator available to reach out to
Oh,
offline?
yes. Yes. Melissa, I just dropped in my to schedule a meeting with me. That goes to my calendar. You can go ahead and click through to that, and then we'll make a
And
time.
Josh,
Mhm.
for the source and the partnership, the organizations that are part of the source that like provide the what am I trying to say? Support. I'll say support for lack of a better word. I'm kind of losing it, but not losing. Anyways, is it limited to people who live in the Cook County area for them if they want to reach out to you all or get support through the source through that program that you guys have with the business partners, the support organizations, that's what it is, the BSOs?
Yeah, that's a really good question. It's both really. Yeah, the source is only for Cook County, but WBDC is for anybody. So if you wanted to meet with me, then it would just be through WBDC. It wouldn't be through the source.
Mm-hmm.
Or meet with my team, it wouldn't be right. That's a really good question. You got it. This is really good. Good questions. Lulu, what is the product that you're selling?
So I sell a variety of electronic components for manufacturers of medical equipment in Mexico.
Oh, I see. So why would your pricing vary?
Because a customer may buy more quantity of that product than other.
Yeah, perfect. All right, so you have like a volume discount.
Mm-hmm.
Okay. All right, so it's not different customers, it's rather volume discount. That's perfect. That's excellent. Okay, we're gonna get to that in 2 weeks. I hope you join us.
And
That's
For
actually,
really
sure.
you know what?
Really
Before I
appreciate
let you
it, Josh.
guys go, let me
you got it.
actually drop the other link. So many links to be dropped, so much information and resources, but I will actually drop the link directly to the registration for our next session on March 12th. Same time. It's also going to be in Teams. So please feel free to join us and share with anyone who you feel could benefit from this information. Um, I will collect the slides and I will share the recording that will be on our YouTube page. So I will send out an email later just thanking you all for your time today. And I will share all the resources that we discussed today as well as the recording.
Excellent. This is good stuff. This is high class stuff. And I'm impressed. I'm impressed you're getting this. Laquanda, I give you all the credit in the world. You're getting this done. I wonder if Office of Procurement has ever done this. It seems like it's a generous thing you're doing this.
Well, hey,
Trying to
we have
lift
to
up
give back,
companies.
be the
Okay,
change you want to see in the future and all that jazz.
that's
So,
right.
well, if there are no more questions, I won't hold you guys any longer. We thank you again for attending. We are really appreciative of it. Like I said, feel free to attend the next session. Please take some time to take our survey. And Josh's link is also in there. So I will include that in my follow up email also. So don't worry if you weren't able to capture certain things, I will send out all the resources, send out all this information to you so you will have it. So no worries there. And we just thank you again for your time. And I hope you guys have a great rest of your Wednesday. This Wednesday. Yeah.
Thank you all.
All right. Thank
Thanks,
you.
Kwanda.
Thank
Okay,
you
bye.
so much. Very informational session. Thank you guys.
Thank you
I
for
look forward to
attending.
follow up and to schedule for the next session.
Sounds
Excellent.
good. Thank you. Bye bye.
Bye bye.
Bye.